Sofia, does the scale of Tencent's rally this year make any sense? Who's buying the stock at the moment?
Yeah, exactly. So, I mean, it makes sense that the stock could gain, but a gain of this magnitude, it's very difficult to justify the company being worth $250 billion more today than it was at the end of December, when its fundamentals and its earnings and revenue haven't really changed at all. And you mentioned yesterday's rally, so 11% gain. There wasn't really a clear trigger for the scale of that gain. There was obviously the announcement from Kuaishou Technology, a video startup company that is backed by Tencent, that it's going for an ambitious IPO in Hong Kong, and also a particularly bullish note from Citigroup. But yet, again, you know, you have the stock now trading at 40 times earnings, really getting to bubble territory, and we saw mainland buying, so the southbound flows coming in from Shenzhen and Shanghai. 35% of those flows yesterday went straight into Tencent.
And with those gains, we are seeing the Hang Seng Index close to reversing all the losses from the virus, the trade war, and the protests. This adding billions to the fortunes of the likes of Pony Ma and Jack Ma. Who are the biggest winners?
Yeah, exactly. So the richest people in Hong Kong, or the people that have stocks trading in Hong Kong, are added more than $60 billion of wealth in January. It's not just Tencent that's rallying. It's, you know, the likes of Alibaba as well, doing quite well after suffering a significant loss in December at the end of last year. You know, the reappearance of Jack Ma last week triggered quite a a big rally in the shares there, and added to the wealth of Jack Ma, the Chinese billionaire that we hadn't heard from since November, since the IPO was cancelled. So, you know, it's everyone in Hong Kong, the liquidity that's just flooding global markets. You look at what's happening in U.S. stocks, you see how expensive they are. You know, that liquidity is now coming to Hong Kong. It tends to be the last market to really take that leg up from the ample liquidity that's being pumped into the financial system by central banks globally. And that's really lifting valuations here. Remember, Hong Kong stocks were the market here, the Hang Seng Index was one of the cheapest indexes in the world. So you see that wealth, the liquidity, not just from China, and all the money that's being encouraged by Beijing to go into the stock market, to go into Hong Kong, and mutual funds, ETFs tracking the market here. But also, you know, in the U.S. And in Europe, where shares are really expensive, you look to Hong Kong as an alternative.